I think, one of the points of this cycle that's so interesting is that, remember the US consumer, because they were flush with cash, as well as a hyper tight labor market really up until the summer, has been keeping the US and global economy afloat throughout a very tough period. And that continues to upside surprise. As you were talking about earlier today on surveillance, the more resilient the consumer remains, the harder the Fed goes in terms of tightening policy. So we could stay in this more inflationary environment for longer because the labor market and the consumer have been incredibly resilient. That being said, if you think about Target's results, it really just reemphasizes that, it's not necessarily a Wile E. Coyote moment, but at the same time, the consumer can't keep it going single-handedly forever. And as the labor market gradually softens, and unemployment goes up, not only are you going to have disappointing earnings at the corporate level, but ultimately next year, in agreement with Dudley, it's almost inevitable that we end up in a recession because the U.S. consumer, with a softer labor market, with unemployment going up, cannot single-handedly keep the global economy going forever.
So, Troy, how wide do you think the window is? And this is my question at the moment this week. How big is that window between evidence of inflation rolling over, and we're getting signs of it at the moment, and growth cracking? How long is it before this takes place?
Yeah, so if you asked us 3 months ago, we would have thought it was, Q1 to Q3 is when we finally have, quote unquote, a true recession where unemployment actually goes up meaningfully and consumption rolls over. Because without job creation, income growth, and higher debt levels and inflation, it's inevitable that consumption rolls over. Now it's looking more like a Q2 to Q4, maybe even as late as Q1 of 2024. So we're going to stay. Yeah, no, the lag is quite profound, right? And again, if you look at the data, and one of the data points we always follow very closely is withholding tax growth. So that's rolled over hard, but it's still at relatively healthy levels compared to the post-pandemic era of mid to low high single digits. So again, first of all, job growth slows. Ultimately, we have more layoffs exceeding job creation. That should go negative, and that could be as early as Q2 of next year, but as late as Q1 of 2024. So it's a very wide band in terms of when the next recession is actually declared.